Ja, hallo, Michael Adams hier für Stock-Telegraph. Ich hatte gestern die Möglichkeit, mit einem neuen Unternehmen einen CEO-Roaster Webkonferenz durchzuführen. Und zwar hat mir dort ein institutioneller Anleger aus Deutschland, hat mir das Unternehmen ans Herz gelegt, hat mir gesagt, ich soll mir das doch mal anschauen, was ich natürlich auch gerne getan habe. Und habe deswegen mit dem Ben Mossman, er ist CEO von Rise Gold, habe ich ein Interview geführt und ja, viel Spaß dabei. Hi, this is Michael Adams for CEO Roaster, and yeah, I have the pleasure to do another CEO Roaster web conference. This time it's with a new company, to me at least. I was introduced to the company by one of my fellows who's an institutional investor in Germany, and he asked me to do a video interview and get the story from Rise Gold Corp. Trading on the CSE as Rise, R-I-S-E. And so, I took the chance and invited Ben Mossman. He's the CEO of the company, CEO and director, I guess, of the company. And it's my pleasure that he will run us through the story, through the background, and of course about himself. So, let's start off, Ben. Thanks thanks for taking the time to talk to me. Maybe tell us a little bit about your background first so that people will know who they're listening to.
Sure. Thanks a lot. I'm a mining engineer. I've been in mining for about 15 years. Worked in 8 producing underground mines in northern western Canada. I started my career in Yellowknife, the Con and Giant gold mines, which were quite famous mines. I was there when those were eventually shut down. And then started a public company about 5 years ago, previous to this, where we basically permitted, drilled, built and financed a small gold mine in British Columbia, which got to profitable operations. Was one of the only mines in the world that used pre-concentration to not have any surface disposal tailings. So I came on as CEO of Rise in August. They asked me to find basically a top quality project, which I had been looking at other projects in California and came across this project, the Idaho, Maryland, which was basically being sold as real estate. And then as things progress and doing our research on it has really turned into something very unexpected and quite substantial opportunity for the company.
Yeah, and the company had some structuring some time ago. So the new company is listed on the CSE since April 11th.
Yeah, the company listed on the CSE. It was a company, has been a company for quite some time. It's a U.S. company. Was doing exploration in the United States several years ago, which didn't work out well for them. Company was rolled back, rebuilt basically from the bottom up. They were working on exploration properties in BC before I came on, and now that we've acquired this project, basically bought the simple land of the Idaho, Maryland mine, this will be our only focus. All the other projects that we have in the portfolio are basically irrelevant compared to the magnitude of this project.
Okay, cool. Yeah, to be honest, when I took a look at your presentation, right from the start, I was really confused, because the mine is called the Idaho, Maryland mine, but it's in California. So it's kind of, at least for a European, it's kind of weird. How did those guys come up with the name?
Well, basically, back in the 1860s, when the gold rush started, everyone would have their own quartz claim. So at the beginning of the mine, it started out what was called the Eureka mine, which was the outcrop of the ore body. And then as it moved on to the next door neighbor's claim, was called Idaho, they took over the mining and were very successful in mining the vein, and then eventually went on to a claim owned by the Maryland company, and so it became the Idaho, Maryland mine. And as each mining company ran out of ore on their property, they would basically sell it to the next door neighbor. And that continued for the entire first phase of the mine's history up to about 1900. And they mined a million ounces from one single vein, the Idaho 1 vein, 1900, and then a couple of different outfits came in over the next 20 years, and eventually Errol McLeod succeeded in consolidating all these other mines into one single company. So it became the Idaho Maryland mine, although it also includes the Brunswick mine. So I guess they decided, it's a bit too long to call it the Idaho Maryland Brunswick mine. So,
yeah, no, it's just because Idaho as well as Maryland are also U.S. states, right? And so is California. So, but anyways, so maybe we just start with going through the presentation. But for the German audience, the company is not yet listed on the Frankfurt Stock Exchange, but it has a WKN number. It's A2DQVW. And so if you want to buy, you probably have to buy directly on the CSE in Canada. But this WKN number will definitely help. Okay, yeah, Ben, maybe just start with the presentation. And if I have a question, I will just interrupt you unpolitely.
Sure. Yeah, and I'll just mention that all this is pretty new. We just finished buying the property in January this year. And a huge amount of data from this mine. It was a major past producing mine. Produced 2.4 million ounces so far at really high grades. The average head grade is half an ounce a ton, around 17 grams per ton. Over the last 2 months, we had about 6 people working full time, 7 days a week, compiling all this data and digitizing all the data, because basically no one has ever seen the documents of this mine. When it was running, it was very secretive in the area. It's a major gold camp. Newmont's right beside it. So they didn't want anybody to know the geology of the mine or the mine workings because they were busy acquiring as much land around them as possible. So the last government survey was done in 1940. USGS survey, which are pretty big deal. They'll take years to do them. The entire report is written about the nearby mine adjacent to us, the Empire mine, which is owned by Newmont, and no information at all about the Idaho Maryland. So when we bought the project, we knew what was available in the history, the production history, but until we had actually gotten that data and did the work, it was unknown just exactly what those workings look like. So it's brand new information. We just got our website up last week. We're listed on the CSE. We'll be moving up to other exchanges and looking to get other listings in Germany as well. So it's a new story.
Okay, cool. Yeah, just let's dig into the presentation because there's a couple of things that you just mentioned that are laid out there too.
Sure. So we own the property. It's all the original mineral holdings of the Idaho Maryland mine, and we don't own all the surface land. What happened in the 60s, they sold the surface rights and kept all the mineral rights. And then that property was bought by a local couple in Grass Valley, which eventually ended up being purchased by us. So we actually own the fee simple land. We own the land, and we own 100% of it. We paid $2 million US for all the property. There's no royalties on it. This mine was a major past producing mine. Was #2 gold producer before it was shut down, World War II. Produced up to 130,000 ounces per year in 1940. So it's a very significant project. And immediately right beside this mine is the Empire mine, which produced 6 million ounces by Newmont. And then in the Grass Valley in Nevada County gold camp produced 13 million ounces. So a lot of people will know about the Mother Lode in California, but Grass Valley was actually the #1 gold producing district in California, and this mine was the second largest gold producer in California, with the first.
And it was shut off because of the war, or what was the reason?
Yeah, so basically, an engineer called Errol McLeod put the last kind of glory days of the mine, put all this land together, became one of the richest men in California from the mine. Was already at the second biggest gold producer in the United States, second only to Homestake, was doing 130,000 ounces a year and had just finished a major expansion to the mine. They put a brand new head frame in, new crushers. They were going to drive the shaft to 5,000 feet and double the production from 1,000 tons a day to 2,000 tons a day in 1942. And because of the World War II, the government, had a shortage of copper and zinc. and needed that metal to build war machines to further their war effort. And they ordered this gold mine and basically any other gold mine that didn't have a valuable base metal byproduct to shut down, because they wanted the miners and the resources to go to base metal mining, not gold mining. So basically, at the drop of a hat, they ordered the mine to shut down. Only a very limited crew stayed to maintain it. Company was paying huge dividends out. Something like 97% of the profits were going out as dividends, so they weren't keeping a big cash balance. I think they did that for tax reasons, but they probably weren't expecting this to happen. And the leader of the company, who owned half the shares, this kind of genius mining engineer called Errol McLeod, spent the war years lobbying the U.S. government to allow him to reopen the mine, at least on a small scale. He was unsuccessful to get that to happen. He had a stroke during the war, which left him paralyzed. So he died a couple years later. So when they reopened, they had lost their leader. They had very little capital. They hadn't maintained the mine, so they lost access to a lot of their high-grade areas on the Idaho mine. And when they restarted, they used tribute miners, basically contract miners, that were paid half the gold that they mined instead of using their own crew. So it was really devastating for the mine. So instead of doubling their production from what they started at 130, they would have been something over 200,000 ounces a year. They went the other way. They dropped production to 50,000 ounces. Of course, the gold price was fixed at $35 an ounce. The cost with inflation were 15% a year higher. So eventually, they had lost all their economy of scale, and this mine closed down of gold mining in 54 and permanently in 56, and many of the other mines closed as well. Next door neighbor mine, Newmont, shut their Empire mine down in 56. So the company at that time, probably expected that the gold price fix would never come off, and they let the mine flood. They auctioned off all their equipment. They sold the surface of the land off, and then eventually sold the mineral rights and some key surface property around the main shafts to a local couple in the town. And they went on to make aircraft parts and silos for missiles and things like that. I think the company still exists, actually. But
okay.
So this kind of great mine that was at one of the top mines in the United States, and was getting ready to double production, it just was shut down on the drop of a hat, and then forgotten. So you won't hear a lot about this mine, even though it was such a huge producer, and mostly because these documents, the actual geology and mine workings of the mine, are just not available in the public domain. It's not written into the geological reports. Can't find a section showing anything other than the original number 1 vein. So it's really interesting now to actually get the data, which was kept safe in this local basement for 60 years, and take a good look at what this mine is. And some of this information is really detailed. The mine was a really well run operation. They have things right down to each drill bit that was used for the diamond drilling in the mine. So, ledgers, monthly reports for every single heading, information on 70,000 meters of diamond drilling, channel samples, geological reports done from some of the highest regarded geologists from that era. And all of this information is non-public. So it was never published, and no one's ever completed the detailed geological modeling of the mine. So it really is kind of a first. It really is a really interesting opportunity for sure. And some of these things, like they'll be talking about headings below, like right below the number 1 vein, which already had produced 1 million ounces at over an ounce a ton head grade. So the in-situ grade would be higher than that, but right underneath it, in 1942, they were driving an exploration heading. The entire thing was channel sampled every 6 feet, and the average assays are over an ounce ton, like something like 1.2 ounces per ton, with channel samples up to 14 ounces a ton. And then in the reports from that for when it was shut down, the monthly geological reports, they're basically saying in there, make sure that you restart this heading after the war's duration, and then you look at the maps and the information, and it was never restarted, so it's just sitting there for all these years, and not a single hole drilled under it, nothing like that. So, and then same thing from exactly the other side of the same vein on the same level. They had drilled just before in the 50s, found that the one vein was there on that side as well, and started drifting from the eastern side, and then the mine was shut down permanently. So, something like that, number one vein, a continuous vein that produces over 1 million ounces at an ounce per ton on average, or greater than an ounce per ton on average, that's extremely rare. There's not maybe 3 or 4 in the history of mining that are like that. There's mines that have produced 1 million ounces at high grades, but from a single continuous vein, that is very very rare. So
I think there's a couple of slides in there talking about the historic production, right? So if we move forward.
Yeah.
Yeah, right.
Yeah, this is we put all the information together from all the monthly reports. There is information published in many cases that are similar to this. This is the result of a summary from all the internal documents of the mine, so reconciled to the bullion that was actually sold to the mint from their metallurgy report. So our first step was basically to see what do these mine workings exactly look like. So we mapped digitized all the mine workings, went through all the documents to figure out exactly what was mined from each vein. And effectively, in this mine, you have 2 styles of mineralization: the Idaho, which are these really high-grade veins, gold veins, on the outside of this porphyry block, and then on the inside of the porphyry block, you have Brunswick, which is lower grade but fairly extensive veins and vein stockwork. So the Idaho produced 1.6 million ounces between the 1 and 3. The number 1 was the original vein, and then right beside it, the 3 vein, which was discovered in 29. They discovered this 3 vein system, which is very similar to the Idaho, but offset from it. In 1929, they discovered this 3 vein, which basically catapulted the mine from a couple thousand ounces a year all the way up to that 130,000 ounces a year. So very high grade. Some of these stories that you'll read on the mine, they're talking about actually when they're mining some of these high grade pockets, they'd actually take the ore and put it into a lock safe. I mean, that's how high grade some of these areas were.
Okay, so it's very funny to hear you talking about low grade, and low grade on average is still 9.3 grams per ton, right? So, but anyways,
Yeah.
So is this? Let me ask you a question: is this all gold only, or do you have byproducts like silver or copper? Which is this real gold?
Yeah, this deposit is gold in quartz. So it is effectively just gold. There is silver in it, but a very minor component, like something like less than an ounce per ton silver for every ounce of gold. So the silver is a minor part of the potential revenue.
Yep.
There is tungsten in the mine, but I don't think that would be important economically. They did mine some tungsten before the final shutdown because there was big demand for tungsten. But it is a gold mine, free milling gold, very high recoveries by gravity. So over in those last years before World War II, we've done some metallurgical studies which we news released, but very high recoveries overall, 96%, and very high gravity recoveries. So that basically means there's coarse gold that's not that can be liberated and separated by gravity. So very, very good recoveries and very high potential payables when you're actually milling an ore type like this, because you get very high recoveries and very high payables because you're taking it right to doré at the mine site. So that's the basic story of the production. I mean, we have put out some of the data that we've done so far on the metallurgy, the production. You can see from this graph, that's how dramatic it was. it was right at basically 29 here, right here is where they made the discovery, and then quickly ramped up the production, started, adding more mills, and then right when they're here, this is where they plan to double the production rate. So they were going well. They had planned to go well beyond this, and to put all this capital in to do it, and then it just gets shut down and goes to zero. So with no money, fixed price of gold and inflation, they tried to recover, but there's just no way that they could. If they had maybe succeeded in doubling the production, the economy of scales may have made them able to be profitable at $35 and increasing costs, but that didn't happen. So that's where it's left. That's some of the recoveries that we talked about. Some of the history. I mean, it take probably a couple hours to tell you the entire story or more. But there's a recent book that came out about Errol McLeod that people that are interested in the mine could buy. Was written and came out in just last year. But Errol McLeod was a very smart business guy and engineer. Put all these mines, all these properties into one single company. It's interesting how similar things are to today. But going to San Francisco, raising money to get up back underground, finds this 3 vein, which is huge grades, and becomes one of the richest people in California. He had race horses and orchards and all these things. And and then at the end of the day, I guess, lost it all and his life. But
and for all the guys who are interested to read through the whole history, the presentation is available on the website, and I think there's also a link to this book you just mentioned, right?
Yeah, it's a really interesting book. I think anyone who likes mining or gold mining or even business would want to read that book. So that's why we put it on there, and you can order it. It comes from the United States. So
that was the history. Let's move into the future or into nowadays. So where are we?
Yeah, so this is the property boundaries you can see on this map. So those are all the mineral rights. So there's 2,700 acres of mineral rights. That's all the holdings of the original mine. The surface of the land is mostly owned by other parties. They have a quitclaim deed with our company that we have all the necessary and convenient right to extract the gold under 200 feet. So the stuff that the resource is quite a bit deeper than that, obviously. So you don't need to own that surface land other than some critical parts. We own some land here on the Idaho side, which probably isn't going to be useful for the future. The more key parts here are this Brunswick lot here, which is the vertical shafts, in here. And then we have an option to purchase this 82-acre parcel right adjacent to it, which is an old sawmill site. So you'll see the Empire shaft. That's their incline shaft here, and then the Star mine was around here. So right adjacent to it, Newmont still owns all this mineral rights. Right adjacent, they own something like 6,000 acres, and the Empire mine produced 6 million ounces.
Let me ask another question. So why do you think that Newmont did not buy this land if it was available for like 50 years? Yeah, they didn't have information, but they know they have the adjacent project. So why didn't they show any interest yet?
Yeah, it's kind of interesting how that could stay there. And I mean, that's kind of the question that gets asked a lot. How could something like this still be available? And basically, we bought it for the price of the surface lots. The 93 acres are worth the 20,000 acres. So, and basically the story is that this information was never published on the geology of the mine. So you'll read these internal reports from when the mine was running, and in 48 or 51, and what they're saying is, there's too many exploration targets to list, and we have to explore all these different areas, but you'll read reports or articles from the 70s, and it's the opposite of that. It says things like, for any price of gold, the Idaho Maryland is mined out. So because of this information just wasn't there, the story basically got turned around in the 70s to say that the mine's mined out. And I think if people had realized or had been able to see the geology, when the gold price came out to fix in the 70s, this mine would have been picked up. It would have been explored, and many of the mines similar to this that were picked up after the gold fix, they're still in production today. So it's just the way that things happened in history. The documents, all the library of documents, when the property was bought in the 60s, they went into a local basement in Grass Valley, and they basically never came out of there. A company, did have a lease in the 90s, from 90 to 2013, and they didn't finish the digital work on it because their focus was more on dewatering the mine. Originally to dewater the mine, which they got a permit to dewater the mine and just get it back underground. They weren't focused on exploration. After spent $45 million, only $1 million of that spent on drilling, of which was far to the west near the original outcrop. So that protected it for a long time. They decided to build a ceramic tile factory in the site and permitted that, or tried to permit that. So they kind of got distracted by this industrial minerals and kind of forgot, that they had a lease on this what is potentially pretty significant ore body. So that was the story of it, and over the years, the people that owned it, they died, gave it to 3 of their friends, they inherited it, and then those 3 friends subsequently died. So it was in these family trusts, and I expect that after all these years dealing with this lease and not getting paid for the property, they just decided, we just want the money for the property, and they put it up for sale for the price of the real estate on a real estate website. We came across that. At first I dismissed it, for a couple months, just thinking the same thing that anyone else would think when they first take a glance at it, that, it's just some old time California mine that's mined out. And then I started reading about, in the mineral yearbooks from that era, about how they had doubled their mill size right before the shutdown, and how they had been using these tribute miners after World War II. So I mean, you don't do a huge capital expansion like that if you think your ore body is going to be depleted. And when you turn your mine over to your miners on this tribute basis, I mean, that's a sign of desperation. It says to me that they're completely undercapitalized, and they wouldn't have been able to even have the funds to explore something, or a single person can't afford to do the capital development to optimize their mining method. They'll just take whatever they can get to, even if they're leaving behind 3/4 of the mineralization behind. So that's what originally got me interested in looking into it, and then we purchased the property, not having the detailed maps and information. I mean, the family that owned it was very good at maintaining these documents. They wouldn't allow any of them out of the basement, so they were preserved for all this time, which is pretty unusual. I mean, there might be other things like this around, but if there is, more than likely those documents have been lost over the years. And without those documents, the mine is worthless, because you don't know where the tunnels are, you don't know the geology. It would be starting from scratch with all these workings sitting underneath you. So it's a pretty unique situation. It's something that I wouldn't expect that we could find. You would never expect that you could buy something like this, simple land for $2 million.
That was, I was just about to ask you. You paid $2 million. That's US or Canadian?
US.
Okay.
Yeah. So this is next map. So this is a plan view of all the mine workings. Kind of hard to see, but we'll upload these maps to our website so people can look at them. But that's the one vein there, 3 vein Idaho, then the Brunswick. So that's really detailed. I mean, that's all these maps, smaller maps, were scanned, traced in AutoCAD, put into 3D. So it's a lot of detailed work, which is quite important to understanding that. But you read, like I read these books before we got the data, and really interesting to actually see where these places are that they're talking about. So yeah, so this kind of stuff has never been seen by anybody except for the original workers of that mine,
Okay.
and never being put into digital. So we probably don't want to get too far into like the real nuts and bolts, but of the geology. But this is kind of an important report. There's a tech report going to come out within a couple weeks or so. That'll
Okay.
have a lot of this information in it, so people can look through it. This person here, Alan Bateman, wrote a report in 1948, and he was a pretty top-notch geologist from that time, professor at Yale, and he spent a month in the mine studying the geology, put together a very good report on structural geology, how the mineralization was in place, those kinds of things, which are very useful for us to start an exploration program to find to try to expand the resource to depth. So it's pretty unique. It's not like you're just drilling holes blind. In this case, like you have a major mine with all this production history, so you know about the continuity of the veins, about the metallurgy. You have guys like Bateman who have done all of these studies, so you have a geological model, and now that we've digitized it, we have a digital model. So this is a huge advantage where we actually have a property here that has drill ready targets, because of the zoning in Nevada County, because it's on private land. The diamond drilling is not subject to any conditional permitting, so we can drill basically right away. We'll be preparing to do that, which will require some more financing, but we have the targets ready to drill, and very substantial targets. Underneath this one vein, there's all the veins. The Brunswick they basically just stop mining at 1,600 feet. So easy targets to drill underneath those veins. Some of these veins might 1,000 feet continuously vertical upwards, and then just completely end at 1,600 feet. So, and then these larger scale targets, which called the crackle zone. Basically, Bateman, what he's saying is that because the porphyry block where the Brunswick veins are hosted tapers, it gets narrower with depth. The more narrow it gets, the more subject to fracturing it will be. So the potential for this large scale gold stock works at depth, and that's kind of the kind of blue sky target, in addition and above and beyond the regular kind of one vein, three vein, and Brunswick vein. So you have this potential for a larger scale ore body, like at depth. So this is just some diagrams we put up of the model based on our digitization and Bateman's reports. So basically you have this porphyry block that's being moved and fractured, which brings up the ore-bearing fluid. So it's quite a simple model and quite interesting, because that the ore fluids have to move around the outside perimeter of this porphyry block. So for any geologists that are interested in those kinds of things, a lot of good information will be in that technical report. But it's very good to have something like that, because you're not just drilling holes blindly. You know where the mineralization should extend to depth, so you can find your drill holes. These slides basically show the same thing, the path of the ore fluids. So we own land at the Brunswick shaft, which we can drill virtually the entire target down to this 5,000 foot below surface from our own land. That's our initial goal. I mean, we have really kind of defined our corporate plan from doing this data over the last couple months, and putting that together, along with this technical report. But some of these targets, I mean, you just have to drill them. They they're just sitting there ready to drill right underneath these drifts where they basically just dropped their tools and left. That's going to be the focus of the company over the next year or two is the exploration side of it and drilling under these dork veins to basically build, a 4 to 3 on 1 compliant resource, which we expect is going to be very well received by the public investors and also the mining industry overall.
Right.
Yeah, so that's just some of the modeling. So that's 3D model of the forthright block, and that one vein here, 3 vein here, and the entire perimeter of this forthright block mineralized with Idaho style veining. So that's this ounce per ton, or in 3 vein, 0.6 ounce per ton. And then on the inside of that block is the Brunswick style here at Brunswick. So the ore fluids move up kind of around the outside of this to form Idaho vein, and then the fracturing of the Brunswick block fluids kind of move into this block itself and form these lower grades 9 gram per ton Brunswick veins. Then here is this this is Brunswick style called 52 vein, which is on the opposite side, and this was just discovered in 48. So it's quite an exciting area there where you're actually starting to see Brunswick on both sides of the forthright block. Some of the drilling that we'll be doing, we can drill through surface through all this Brunswick style and the 52 vein and then into the Idaho. So it's quite efficient because you can hit both zones with the same holes.
Okay.
Yeah, and this 5,000 feet is this is where they were targeting with the shaft. So this is the bottom of the vertical shaft. So they were mining here at the 1,600 foot level before the war and pushing the shaft down as fast as they could. They got to 3,000 feet before it was shut down. He was intending to push this down to 5,000, all the way down to 5,000 feet with this mill expansion. So they were kind of getting a pretty clear idea of what the geology was before it was shut down, and that I think that's why that they were pushing that shaft down so quickly. So in my opinion, they probably would have been able to double the production rate if they had not been shut down. So
okay.
So that's the basics of the project. Like I said before, it's pretty early days for our company, and we're just getting started. Getting the website up, getting this work done, the first technical report. But this is something that very, very unique. I never expected to be able to find something like this.
Right.
And just because of the way the history worked out and timing, that we were lucky to be the ones to be able to buy it.
Okay. Maybe what we should talk about is kind of the share structure. So what are your, of course, these are the numbers, but who are your major shareholders? You just announced another financing. Is that already closed, or is it going into a good direction? Or
yeah, it hasn't closed officially, but so these numbers here assume that it is closed. We expected it would close this week, but it'll close probably next week. But
okay.
but all the subscriptions are in. It's just a matter of doing the paperwork to close it.
Right.
So that $2 million is it's not earmarked for drilling. It's more to get the company more established and prepared for drilling. What we want to do is get this technical report done, which will be done in the next couple of weeks. There'll be a couple more news releases coming out, explaining more of the exploration targets in the mine, and then getting prepared to market the company. It hasn't been really marketed. It's pretty much an unknown company. No one knows really about what we're doing other than people that we happen to bump into or talk to about. So there's a long ways to go, we think, to get closer to what we think is fair as a market value. So we want to do some work on the marketing side and then get prepared to do a fairly significant financing, probably within, say, the next 3 months or so, to start drilling. So hopefully we can start drilling by late summer or fall, and then you'll start seeing some of the drill results from that.
Okay. Can you name some of the? Sorry, can you name some of the major shareholders? Or what's management and insiders own?
Well, the insiders, they probably own, between the various people who founded the company and are supporting the company, I don't know what the exact percentage is, but maybe 50%. Yeah. So, and then a lot of the company was sold during the last private placement that was done around Christmas time to purchase the mine. So the company had something around 30 million shares outstanding before we purchased the property. And then post this 2 million financing, we'll have 66 million issued and outstanding, and 35 million warrants that are priced at 40 cents a share. So more than half the company are new shareholders. I can't really tell you specifically who those shareholders are, but they're all strong shareholders. Mostly small funds or wealthy individuals who are in it for the bigger prize of showing what this project really is.
Okay.
It does trade well for. Sorry, go ahead.
Yeah, no, I saw that the trading, for that you are not like really marketing the company. The trading doesn't look that bad. But actually, I have two more questions. First, but I think there's another slide in there. We should talk about the rest of the management team. And second is like just your thinking. What's your end game? Is your end game to really bring this project into production, or wait for Newman to buy it, or at least make an offer, or someone else?
No, I mean, I think that once people see what this deposit is, and it's not hard to see that, if you look at the drawings of the mine and actually, understand the geology, I think it's not hard for people that know mining to understand that this deposit is a very serious exploration opportunity. So that said, I mean, I think that this would be something that would fit into almost any gold producer's assets, and really could be a cornerstone of building a pretty significant gold company on its own. So I think, like, down the road, I think that it'll be difficult for Rise to take it to production just because it's going to be so valuable. And that doesn't mean that I wouldn't want to put it in production, because I would. As a mining engineer, this is something that would be really exciting to build. And we're going to be, our focus is on exploration to start, say over the next 2 or 3 years. But if you're able to put a resource together that's similar to what was mined here before, they mined 2.4 million ounces at half ounce per ton head grade. And the head grade, that's the mill head grade. So the in situ grade of that resource, before the mine dilution would be significantly higher than that. We don't know what it is, but you look. So when you compare this to other deposits that are being mined today, if it was in production at this half ounce per ton, there's basically, that's with the top ranking, 4 deposits, including Red Lake, which is producing at a half ounce per ton head grade. So it's a pretty big deal. If you can prove that this resource is going to expand to depth, and there's a lot of reports written about the Empire Mine, which basically say that there is no change with the tenor of the mineralization to depth. So we feel pretty confident that gold should continue to depth, to very deep depths, and a deposit like this, is so significant that you would fully, you can make a pretty good speculation at least that you're gonna be able to drill a pretty good resource. So.
Right. Oh, great. So do you want to tell us a little bit about the other guys in the management? And that's a coincidence. I know Cale from his job at Eagle Hill.
Really?
Yeah. So that's funny.
Yeah. So I mean, the company was set up when it did the IPO last year as more of a grassroots exploration company, And now that we have Idaho, Maryland, started talking to some people over the last couple of months about the project, and different people that have pretty good records in the mining industry, and Alan and Tom decided to come on the board, I guess just last week. So they are really really good guys. Both Americans. Alan came on as the chairman of the board. Has a really strong resume. He was the GM of the Grasberg mine. He had something like 6,000 employees working under him, and was the GM of 3 other major mines in the United States. He was the chairman of Arivo Gold for 5 years before it merged with Alamos Gold, which is $1.5 billion merger, amongst many other things. So a very experienced guy. Likes mining, and recognized that this project was a great opportunity. So he agreed to come on the board. And then Tom, who they were on a board together for i.V.m. Copper, which was recently bought up by Teck. Alan introduced us to Tom, and speaking to Tom, he liked the deposit, so he agreed to come on as well at the same time. And Tom is has a long history in mining and geology, so 40 years experience. He was the vice president exploration for Fortuna Silver during the drilling out and expansion of their San Jose mine, and over those 10 years, Fortuna became, I think, over $1 billion company. So that was quite successful. He recently retired from there, and they came on our board. So he's not. I don't think he's on too many boards right now, but yeah. So it's kind of like a post-retirement project for him, and
okay.
Yeah. So we're getting to know each other quite well. And Tom's got been involved in quite a few different exploration projects. So having guys like Tom and Alan on the board, and having that experience to know basically what is the best way to explore on the project, where we're going to get the best return for our shareholders. So great guys on the board. And we've got John, who has raised a lot of money for different companies in the past, so a lot of experience in the junior markets. And then Kale, who's the CFO and the director. So I think we got a pretty strong team coming together. As things move forward, we get to this to a major financing where we're going to start drilling. Then we're gonna expand our officer team as well. Right now, we don't. It's not necessary until we're ready to start, but we'll be adding a working geologist, chief geologist, or VP exploration for the company, so that we can make sure that everything is done most efficiently as possible.
Okay. Are there any slides left? Yeah, are we done with the presentation?
Yeah.
That's a summary. Yeah, maybe that's a good finish. Yeah, maybe just sum it up again in your own words, and so that we have a conclusion.
Yeah, I mean, basically this is the main important thing, is like we actually own the project. With fee simple land, that's really important in the United States. We're not on public land, we're not in national forest. So the permitting and all those kinds of things are always led by the county itself. So that's a key thing. There's no royalties on it. This was a major past producing mine, so 2.4 million ounces produced already. Very high grade. That's average of a half ounce per ton head grade. So 17 grams a ton. That's a mill head grade. So that's not the in situ grade. So people should understand the difference between that. And then inside that 2.4 million ounces, a half ounce ton, you also have these Idaho veins. Number 1 vein, which produced almost 1 million ounces a ton at over an ounce per ton head grade, and something like continuous, plus 1 ounce per ton single vein. There's maybe 3 or 4 of them in the entire history of mining. So very unique, very special ore body. Virtually all these veins are wide open for expiration for depth. You know, they put out the news release. People should look at that. That came out on number 1 vein target. A very substantial indication that we could expand the number 1 vein to depth. Same with the Brunswick veins, completely open for exploration below 1,600 feet. And then you have this larger target called the Crackle Zone under the 60 winds area, which has never been drilled. So very unique that way. You know, we talked about the management. You know, we got guys who have very strong careers, like Alan and Tom, who have come on our board, and I think it's quite a good indication of the project. You know, Rise is just, you know, has just been a small company on the CSE, virtually unknown. You know, when you come on as a director of a company like this, you know, you're not doing it. There's no need for these people to do that. You know, they're coming on because they're interested in the project and they think that it has a good potential.
Okay, great. So first of all, thank you very much for taking the time to run me and educate me about Rise Gold. So I think that was a very good first overview. I urge my viewers and subscribers to take a look at the website. The presentation is on there. There's a link to the book that Ben mentioned. And yeah, not all parts of the website are already filled with content. Yeah, but as Ben indicated, it's a fairly new company, so it's worth to check it maybe like every second week. Yeah, for new content, new pictures. Yeah, I saw that the picture part of the website, there's only the historic ones, not the actual ones, but no worries, that will come. And yeah, as Ben indicated, there will be a report being published over the next little while. There will be news flow, there will be a drill program, and I think it's as Ben said, it's a unique story. So I urge you to at least put the company on your watch list. Again, the symbol on the CSE is RISE, R-I-S-E. And the German WKN number is A2DQVW. Okay, so thank you very much, Ben, for taking the time. It was my pleasure. So any final words?
No. I mean, just, yeah, like you said, there's a lot of stuff going to go on the website soon. So, yeah, it might look like it is like not complete, you know, so definitely keep an eye on it. And there's going to be a lot of things happening with the company even over the next couple of weeks. So,
right. And you know, the good thing is you're a mining company, so you need to take care of your project first. You're not a tech company who needs a nice website. Anyway, thank you very much, and good luck with your endeavors. Bye-bye.
Great. Thanks a lot.